Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial language of big business, and sometimes the words can really bite you. Get ready because today we are diving deep into a major acquisition that could shake up an entire industry. So what we have here is a big announcement from Gibraltar Industries Incorporated. They've just signed a deal to buy another company called OmniMax International, LLC. This isn't just a small purchase, this is a multi-billion-dollar deal that could change fortunes. Basically, Gibraltar is buying OmniMax from its existing owners. OmniMax is described as a top maker of roofing accessories and rainwater systems in North America. So this is a move to grab more market share and expand their business. Now let's talk about the price tag. Gibraltar is shelling out a massive $1.335 billion in cash for this deal. That's a lot of zeros, folks, and it shows how serious they are about this acquisition. They plan to fund this with money they already have plus some new loans. They've already got commitments for $1.8 billion in financing, which is actually more than they need for the purchase price. This includes billions in loans and a revolving credit line, which is like a flexible loan they can draw from as needed. This means their ability to get this deal done isn't the main hurdle. Of course, big deals like this don't just happen overnight. There are always conditions that need to be met. The most important one right now seems to be getting the green light from regulators under something called the HSR Act. Think of this as a check to make sure this huge purchase doesn't create a monopoly or unfairly hurt competition. There also can't be any legal bans preventing the deal, and both sides have to be telling the truth about their business and sticking to their promises. If all goes well, they expect to wrap this up in the first half of next year. The agreement itself is packed with standard legal stuff, promises about how things will be run until the deal is done. For example, OmniMax has agreed to keep running its business as usual and not make any big changes without Gibraltar's, before the deal closes. Now, what happens if things go sideways? The deal has a drop-dead date November 16th of next year. If the whole thing isn't sorted by then, either side can walk away. There are also provisions for extensions if regulatory approval is taking longer, especially if it is due to antitrust concerns. And if the deal falls apart for specific reasons like not closing on time or because of those antitrust issues despite everything else being ready, Gibraltar might have to pay a hefty breakup fee of $55 million. So it's a big commitment with some serious consequences if it doesn't go through. To get the word out, Gibraltar also released a press statement on November 17th, making their big acquisition public. Now, like most big corporate announcements, this report is full of what they call forward-looking statements. These are essentially educated guesses about the future of the company based on current information. It's important to remember that these are not guarantees. Things like economic changes, supply chain problems, or even just customer demand can all affect actual results. The report actually lists out a bunch of risks. We are talking about regulatory approvals not coming through, delays, or even the deal not happening at all. They also mention potential disruptions to their current business operations and issues with keeping employees and maintaining relationships with customers and suppliers. Basically, a lot can go wrong between announcing a deal and actually closing it. They are also worried about trade issues like tariffs that could make their raw materials more expensive, and of course the general economic climate, inflation, and even changes in government spending could impact how well this combined company performs. And finally, the report is officially signed off by Joseph A. Lovchio, the Vice President and Chief Financial Officer. So, what is my take on this massive deal for Gibraltar Industries on the surface? Buying OmniMax for $1.335 billion looks like a bold move to significantly expand their business and product offerings in the construction materials sector. Diversifying into roofing accessories and rainwater systems could reduce their reliance on existing markets and open up new revenue streams. The fact that they secured financing well beyond the purchase price suggests strong backing and confidence from lenders, at least on paper. However, this acquisition is not without its risks. The largest hurdle will be obtaining regulatory approval, especially the antitrust clearance if this falls through. Gibraltar could be on the hook for a $55 million termination fee, which is no small sum. Beyond that, integrating two companies, especially one acquired at such a high valuation, is incredibly challenging. There is the risk of cultural clashes, operational inefficiencies, and the potential for losing key talent from either side. While the report mentions plans to finance the deal with existing cash and new debt, we need to keep an eye on their leverage levels. Taking on substantial new debt could strain their financial flexibility down the road, especially if interest rates continue to rise or if the integrated business doesn't perform as expected. Management is also bracing for potential disruptions to their existing business operations and relationships with customers and suppliers. Looking at the bigger picture, Gibraltar is betting big on the construction and building materials market. The report does highlight various economic uncertainties, including inflation and changes in government spending that could impact demand. While the acquisition could bring significant synergies and market power, the execution will be absolutely critical. The devil is in the details of the integration, and whether they can truly unlock the promised value without stumbling over unforeseen obstacles. In conclusion, Gibraltar Industries is making a significant strategic play. It has the potential for great rewards if executed flawlessly. But the path is fraught with regulatory integration and economic risks. Investors will want to watch the antitrust review very closely and see how well Gibraltar manages the integration process in the coming quarters. Alright, that is our deep dive into Gibraltar Industries' latest major move. What do you think about this massive acquisition? Is it a game changer or too risky? Let us know your thoughts in the comments below. If you found this breakdown valuable, give this video a thumbs up and make sure you are subscribed for more corporate deconstructions. Also, check out the link to our Discord community in the description for more in-depth discussions. Thanks for watching, and see you next time on Corporate Decoder.